This is technically episode one of our new season. We're trying to do a huge focus in like NFT fi stuff specifically. So we're going to be doing that twice a week. So it's going to be pretty exciting. Appreciate you guys coming on as like the first guest, testing us out here.
Yeah, we're excited to be the test subjects, I guess, on this on your new format. So,
All right, so we'll just get into a bit about your guys' positions, experiences, specifically in like, options, NFTs, all that.
yeah, absolutely. So, I'm Jake. I'm one of the co-founders of Hook. Our other co-founder, Reggie, is kind of mostly focused on the technical side. He kind of comes from a consumer products background, so working at big consumer social apps, basically. And I personally have more of like an art world background. So we kind of got into NFTs mostly through kind of, I guess, like the convergence of those two things, where kind of, I guess pretty recently, maybe let's call it around the time of the loot. There was kind of a bunch of people in my case, the art world, or in his case, the consumer social world, who were really excited about the new technology. And that's kind of how we dove in.
Awesome,
Yeah, and
awesome. And yeah, go ahead.
oh, I was just gonna go. I'm Austin. I'm the growth lead at Hook. I've been in crypto since I graduated. I previously was at a DeFi company, and just for like my NFT experience, I got into NFTs in like the summer of 2020, when Zora and Foundation used to actually sell like physical products versus NFTs, and that kind of got me hooked. And then yeah, kind of the blend between DeFi and NFTs interested me, and that's kind of why I joined Hook.
Cool. Cool. So from there, I think we can kind of get into it. I guess like one of my first questions, at least, which I sort of have an answer to, but I'm kind of keen to hear what you guys think, is why, in with NFTs being the underlying asset, why options over other derivatives specifically?
Yeah, that's I guess kind of a really really important question. So
Yeah.
I guess maybe as like a piece of background to go first, I guess I can describe Hook. So Hook mostly focuses on a type of option called like or known as like a covered call option. What that basically means is someone will deposit their NFT into the protocol. They'll set a strike price, which is the price that they're willing to sell it for, and an expiration date, which is the day and time that they're willing to sell it for. And then the protocol will mint them back on that deposit an NFT that represents the option as like a position NFT. And then they can then sell that position NFT for money to someone else who's basically buying it because they believe that the price of their underlying asset is going to increase beyond that kind of strike price that I just mentioned. And therefore, that option will be more valuable. So I think kind of going into the question of like, why does this work well for NFTs? There's like a couple of important components. The most obvious is that the difference between NFTs and fungibles is that, there's different rarities, different traits. It's not just all like one token. So that kind of makes it much harder for people to determine a price. And and it actually every NFT, even inside a collection, has a different price. So it's better to be able to just say, instead of talking about an NFT collection as a whole, you can actually just value this particular one. So to that end, the mechanism that I just described doesn't depend on any oracles being correct. It can work with rare NFTs or common floor NFTs, and it basically is like simple to understand from like a writer's perspective about exactly what's going to happen to them. The other issue with NFTs that make options like particularly attractive is that there's kind of often periods of like low liquidity or no liquidity, which if you have like a more continuous synthetic derivative, it's very hard to determine like what that derivative or what that synthetic marker should actually be trading at. And with options, that's like a little bit less of a problem because again, you're not depending on that oracle. So it's kind of better suited for those like high volatility situations where if you're on like a synthetic product, you would almost certainly get liquidated regularly, but we don't have the liquidations.
Yeah, I'm gonna backtrack a bit here, and the NFT fi like niche in general is still pretty small. When did you guys create Hook, and like kind of what gave you the conviction that this like small niche and this small sector of crypto was gonna be is gonna be something bigger?
Absolutely, yeah. So we have been working on Hook for a little under a year now. I think, ultimately what really drove our conviction had like less to do with the, then current use cases for NFTs that, were working, which is, you maybe broadly consider like art and collectibles. And it had to do more with like this idea of like, permissionless assignable ownership, which, seems like a really powerful and composable construct for, tons of other assets in the real world, from like financial assets to, I guess, kind of like representations of like, like UDB3 liquidity positions to IP to music, like all this type of stuff really does make sense as NFT. And we believe that, kind of the overall NFT sector will grow. There's just kind of a natural need to have like good derivatives products and good financial products more broadly to kind of support that ecosystem. So that was kind of, the base thesis, and, it kind of pays to be early in a lot of those categories. So we were willing to, to build that even though it was small.
Cool. And then what, like, how have you seen, because obviously it is still early, but I think myself and Cedo were, uh, I definitely like later than you guys, I guess, to the trend. What was it like in those like super early days? Like, uh, I guess what projects were like live around that time, and what were the theses kind of centered around? Because right now it seems like, despite it being quite small, most of the hype kind of surrounds lending, and then I guess a good bit around NFT perp as well. But it seems like it's starting to leak over to options as of recently.
Yeah, so I would say at the time, lending was really the main thing, but it was actually much more around peer-to-peer lending. Like NiftyFi was kind of like really the dominant player, and then Arcade had, I guess had raised like a bunch of money. And then I think at around the time that we started, JPEG was kind of announcing that they were in development in this kind of like peer-to-pool type model, was coming out, and that was like I think where most of the hype was. The market actually has changed a lot on the lending side, like in the past year-ish, because the lenders and or really, I mean, like the whole market has grown, but it's shifted from being dominated by the peer-to-peer to having much more of a peer-to-pool component.
Gotcha, gotcha. Okay, and then to get into Hook a little bit more, as a humble Ponzi connoisseur myself, I have in my endeavors in looking into different NFT-Fi projects, I found that with options specifically, the most challenging component for me as a user is the LPing process. I'm wondering if you guys are able to share any information as to what that looks like, and if you foresee like any limitations for your liquidity providers.
Yeah, that's actually like a really great question. So definitely options are a very hard product to price and buy, which is kind of I guess like the underlying problem that that makes it difficult to LP. If you're interested in kind of trading on the protocol, right? So our kind of thinking has been that we're focused on like ease of use type product layers on top of like the underlying protocol that will really simplify those processes. So if you're interested in buying options, we've actually just gone through audit on a new kind of order type that we support in our system that allows you to set the price of the basically make a single order on the entire collection, and that order will automatically compute a price for you every time it gets filled, and just buy options on your behalf without you having to do those updates and without you having to have as much risk that you like horribly misprice something. On the option writing side, so that's depositing NFT and creating a call option, we've simplified that process to make it instant. So you have now in certain collections on Hook instant liquidity for writing options, and then also kind of again abstracted away the pricing question by working to make sure that the prices that are offered to those to those users, in this instance via our product, are fair, and it's kind of in like a user-friendly interface where you can select not exactly like what option terms do you want, but basically just like how much risk do you want, which is an easier question for most people to answer.
Okay. Okay, that makes sense. Ends up with like an interesting kind of order book model there. So then what are the, at least from like an early stage, what are some, because I know there's some pretty like complex option strategies there. Well, with like TradFi options in general, but what is going to be viable for users to run from not necessarily day one, but from like an early stage with Hook? Are they going to be able to do some of the more complex option strategies? Are you guys going to create specific strategies for them, or is it going to be mostly like up to users to create that process for themselves?
Yeah, so we think that the most interesting option strategies that users might want to try are really more kind of multi-product for the time being. So, for example, we've written some blog posts in collaboration with NFT Perp before, describing how you can take like a delta neutral strategy or options, or use options to hedge a perp's position to make sure that you don't, like if you're short perp, that you don't lose a ton of money if the price moves or something like that by using an option to hedge. And I think that's kind of like what we're most excited about in the early days for people doing, I guess, what you might think of as these like more complicated strategies. And I think, I guess like our main focus in terms of the ease of use of the protocol is actually making it easier for people to kind of like price and make orders versus, trying to allow them to get into more and more and more complicated positions, which have the unfortunate side effect today, given how low the liquidity is in the overall NFT market and especially in derivatives, being extremely difficult to unwind safely. So a lot of these like complex option strategies that exist in TradFi, if you were to attempt to do them with even in DeFi options actually, but especially in NFTs, you're likely to get pretty stuck and lose a bunch of money.
Gotcha. Okay. And I believe the answer to this is no, or a lot more complex than being able to answer in one call. But writing naked calls or naked puts, just being able to sell that alone, is that like, I'm guessing that's like on the roadmap for you guys at some point, but
Yes.
how attainable do you see that being? Because I mean, in my mind, that's like a form of under collateralized lending, uncollateralized margin, but I don't know fully how the process would work on the back end to understand like how feasible it actually is.
So we think one of the other big changes that's happened in the market in the last year or so that we've been working is that those types of products have become way more feasible. There's a couple of factors. One of them is that on a lot of the major collections, there's a more clear kind of like bid-ask spread, or I guess like a tighter bid-ask spread, which makes it easier to determine like basically what the depth of liquidity is in like a liquidation case and get a better or a stronger like price signal, right? The second thing that's happened is that basically there's a lot of lending markets that are up already, like Parispace, I think is a great one, but also in Nifty 5 that demonstrate that one, people are willing to take key related risk with their capital, especially or even in a pool model, and two, that basically the price oracles are reliable enough for kind of lots and lots and lots of actual assets to be tied to an oracle that like seems kind of manipulable. So basically, a lot of the situation that really drove us to not want to rely on oracles early on are getting resolved to some extent, where we feel comfortable introducing them incrementally and then having, I guess, kind of a synthetic option instead of a collateralized option is much more possible. And we actually think that the area where that will be most exciting is really on the put option side, where today, cash secured puts, which is kind of the equivalent of the covered call, are a product that is actually probably one of the most popular products in NFTs if you think about how the Nifty 5 loans actually work, but are a product that's extremely capital inefficient. And we, want to kind of like, improve that or improve the opportunities for capital efficiency there for people. And we think that will drive the price of those cash secured puts down substantially from the put buyer's perspective, which make them much more viable as a form of insurance against, let's say an energy loan or as a hedge for a major collector who's like wanting to hold a bunch of NFTs. So it's definitely, something that's like evolved quite quickly, and we're excited to see what happens next, and of course participate in it.
Awesome. And leading into kind of the end part of a position for the settlement auctions, I was reading a bit about how that's going to work on Hook. Could you explain more on, you know, if there's going to be a barrier to entry for participating in that? If you have any partners that are looking to kind of provide a lot of liquidity there? Because I saw that there is some imagery in your docs that show a value calculation that's comes from Spiciest. Can you go into a bit about your relationship with them and if there's like some kind of liquidity underlying in that valuation, or if that's just like a pricing mechanism from them?
Yeah, so I guess a couple pieces there. So the way that our current call options settle is basically the underlying asset, which is deposited in the protocol, is auctioned with a reserve price equal to the strike price of the option. So basically, there's an auction with a minimum bid that's equal to the strike price. If no one bids in that auction, then the option expires out of the money, and it expires worthless basically, and then the writer can kind of write another option or withdraw their asset. And then if someone does bid in that auction, the writer gets the strike price, the option holder gets the difference between that high bid and the strike price, and so basically the overage, and the bidder actually just gets the NFT and then normally goes and sells it somewhere else. So we've found so that auction is completely permissionless. So you are able to bid in that auction if you are, for example, the owner of the option or the writer of the option or just like a random third party. And we haven't had really too many problems in terms of those auctions settling at a price that's like too low. We actually have a couple going on right now for Milady's. And the way that we kind of show that is pretty basic today, where we just have like a group chat of a bunch of people who are looking to do kind of NFT arb, and then they bid in the auction, and then they sell the underlying asset on some exchange elsewhere. I think in terms of like the spiciest question directly, like early on in their history, prior to kind of becoming more of like a market maker or a general liquidity provider in the NFT markets, they kind of had more focus on creating price oracles. And so at that time, we actually partnered with them in order to do that. They've actually since like removed their price oracle products, so those prices no longer appear in our front end.
Are you planning on replacing that with anybody specific?
It's kind of a good question. There are a lot of pricing providers. We found that the kind of price estimate doesn't really add that much, useful information for our users because they tend to have their own view of the price and underlying. However, I think Austin, you maybe speak a little bit more to it. There are definitely some people that I think have interesting methodologies that we've talked to.
Yeah, I would say just because people tend to see options as like a very complex product, we just want to give them as much information as possible so that they can make the best decision. And by giving them just like floor price, estimated value of the NFT, that can just help them make better decisions. And also, a lot of it is if someone's writing an option, we don't want them to think that they're writing it on a floor asset and it happens to be a rare one, because then one, it can misprice and then they could just lose, I guess, a better asset. And then also to kind of go over the settlement auction, how Jake mentioned that one, we don't use oracles, and then two, we can have, I guess, like not anything besides like a floor asset in the protocol. Since the asset is actually auctioned off, that's the reason why there can be, I guess, a rare asset. So as long as people know about it and know about the auction, then that can occur.
Awesome. And I know you guys talked a little bit about a potential new product that you guys are releasing today. Could you guys go into a little bit more depth of what that is?
Yeah, absolutely. So I touched on it a little bit. We basically are introducing a new bid type that we're calling vBIDS. it allows the protocol to constantly update the exact price of your bid based on the current market condition, and really reduces the chance that you're mispricing an option. That kind of extension to our protocol we had on our Twitter last week was the audit has just completed, and we're planning on launching it in mid May in the next few weeks after we get a little bit more testing in of how it will work in person. But or sorry, in the product. But what's really exciting to us about it is basically it takes this question of like how do I bid on a option from basically looking at every single option that's in the market and deciding if you're going to accept the price that it's listed at, which is generally pretty challenging, to instead just thinking about, okay, what are other people bidding using these vBIDs in terms of the amount of volatility that they think is happening in that individual market, and essentially how much volatility do I think is going to happen relative to that. And I can just place that bid and automatically buy options, or the protocol will automatically buy options on my behalf as long as I keep that bid open. So we think it's going to be a great way for people who are seeking either that kind of levered long exposure on a collection to acquire more assets, or for people who just want to participate more broadly in the option market, perhaps a more complicated strategy, to be able to actually do so without having to build, what amounts to, in some cases, like really complicated infrastructure to make sure that the price that you're offering for each option or set of terms is actually fair and up to date.
Cool. Okay. I want to I want to ask, so this is a question that I like think about a bit myself too, and is like one of my I'm hoping to ask like all of the different projects we have on from NFT this as well, because I am still like torn on this. Basically, like a lot of most of the NFT finance protocols that I've spoken to or that I've read about in their like pitches, or in their, whether it's their pitch deck or like validating the market or whatever, a lot of it is based off of like the perceived growth of the NFT market. And a lot of, as a result, I think, despite the fact that a lot of the products are early, even in a more complete state, they're much more suited towards what the market will grow to be, like what kind of consensus is as to where things are headed with regards to like gaming assets having, obviously more less volatility one day, and having better pricing mechanisms. But my thinking is that like a lot of that stuff is still far off enough that I'm wondering if there's any protocols or any, like, if it's more reasonable at a certain point to try and build for the market that we have now, the communities that we have now, and fitting those needs as best as we can, which, some protocols are doing that to some extent, I think. But in my mind, the longer term vision is always kind of getting to that mass adoption level of NFTs. I know I kind of rambled there a little bit, but I'm curious to hear your guys' thoughts there, and I'm happy to clarify on anything if something was unclear.
Sure. I mean, I think pretty much anyone who's live right now, like, is just out of necessity has to be building for the communities that are there today. So, regardless of what you think is going to happen in the NFT market, if you want to like develop your product and improve it and get feedback from users, you just have to, like be listening to, or yeah, basically be engaging with, the communities that are there. I think the challenge, and probably like a lot of what you're seeing, especially when it comes to people who are seeking to raise venture, but even just in general for people who want to build, businesses that are viable, is that you just do need kind of like, larger markets or yeah, you basically do need growth into like a larger overall market size to make a lot of that stuff attractive. So I like our kind of approach has been basically to focus on the people who are using our product today, the communities that would use it today, and how do we help make that possible, with the knowledge that as we kind of like build liquidity and as the market does eventually naturally grow, we'll benefit from kind of having like a really great offering.
Yeah,
Awesome. Good answer.
I'm curious to hear what you guys think about the incentive structure that you're seeing a lot in NFT Fi that's garnered a lot of the attention that it's getting. Whether it be like, for instance, Blur, their airdrop, or you're seeing like NFT Fi launching their points mechanism for lending and borrowing. And I think in the DeFi options market in general, one of the biggest problems they face is incentivizing people to write these options in general. Do you see a future where you need that kind of incentivization, or do you think that as the market matures, it'll just naturally happen?
I think that's a fair question. We obviously are watching what other people do, pretty closely in that respect. And our basic approach is that with any incentivization, we just need to make sure that the incentives are incentivizing users not for kind of doing wash trading or not for kind of like, just being like I don't know, like a user of the protocol generically, but actually for taking like the type of risks that make your protocol more attractive, or better. So like one thing that you saw like Blur not do, or at least they don't do it anymore. I can't remember if they did this initially. Is you don't get a bunch of Blur points for dropping 1,000 ETH into a Blur pool and then not bidding with it, right? You need to actually like do the bids in order to make that like in order to make money from their incentive structure. And I think when it comes to Hook, we're kind of focused in the short term on trying to make sure that our product itself, like what the things that you can do in the product, are conducive to being able to add those incentives in the sense that we have like easy ways for people to like take the types of risks that really help improve the overall protocol liquidity. And I think like a product like vBIDS that we were just talking about is like a great example of that, where an everyday user, is now much much easier for them to kind of take that risk, and then and that type of risk they take of basically buying these kind of levered long instruments, these call options, really does make the protocol better for other users.
And then, so the users, I guess, obviously in the longer run, having more and more, I guess, like normal or like simple users being able to interact with it is obviously part of the vision. But when you guys first go live, what kind of users are you envisioning interacting with your protocol? Because I guess to give like lending as an example, hedging is like the main use case, I think, and obviously like fast liquidity for certain collections. But in general, I think that the reasonable hedging opportunities are harder to come by these days, given the lack of demand. It's mostly driven by incentives, I think. Do you guys envision it being the same way with Hook?
Yeah, so I'm just trying to think about the type of users that we currently have using the protocol.
Hmm.
Like I think the most attractive product is our Earn product, which basically allows people who, for example, hold a bunch of Miladies to deposit some of those into the protocol and earn money regularly for creating those options. So we think that that's kind of like that's kind of been like our bread and butter, so to speak. In terms of like what type of people want the levered long exposure, our kind of like general view is that that's like really market driven. So people like don't want to be long when there's like a huge contraction overall in the NFT market, and kind of levered long is even worse. So that's kind of something that we're thinking a lot about how we can better serve. I guess going back to your question about Nifty Fi, it's definitely true that like the hedging opportunities are like one of the things that like I guess are like one of the big advantages, I guess, of using Nifty Fi. But there is also like quite a bit of volume on that protocol, as well as some others, of people basically trying to free up liquidity to pursue other like generally like far earlier stage NFT opportunities. And the reason why is like the kind of earnings hurdle is very high to like beat the interest rate on your Nifty Fi loan, right? So if you're taking like a 30 or 50% APY loan, you actually need to find an opportunity where you make tons of money. But a lot of the people that hold these high value NFTs anyway actually have like good strategies, or at least believe that they're able to do that. So you do see some accounts, like pretty regularly using Nifty Fi as a borrower in order to get access to like a new mint or something like that. So, and I think that the kind of like hedging use case will eventually be superseded by other products that are essentially just a cheaper way to hedge and that don't require you to actually sell the NFT that you originally wanted to keep instead of selling it, at a high price, and in order to like realize the benefit of having the hedge.
Mm. Okay, and then these users that you guys are seeing, regularly using lending protocols, regularly using Nifty-Fi or Arcade or whatever. I don't know if this is still the case, but back when I was first evaluating these protocols, it was for the most part like a handful of users making up most of that volume. Just the same way it is with most markets to some extent, I think,
Yeah.
especially if you look at like blur farming. But I remember it being like particularly extreme at that time.
Yeah, on Nifty 5, it was very extreme. It was like
Yeah,
maybe like 20 people were like 80% or something
right,
on the order of that. Yeah.
right. Is it still that way? Do you know?
I actually don't know. Austin may know.
Oh.
I think it's definitely more distributed now. Um,
Mm-hmm.
but I guess also like with like large players leaving the space, like Franklin, for example, who I think was or like a significant amount of BenDAO's volume. Um,
Mm-hmm.
I think it's definitely starting to, I guess, dissipate and spread out a little bit more. And I think the bigger thing is that just people are starting to be more comfortable, I guess, financializing their NFTs. Whether that's just because other people are doing it or whether it's the bear market, but I think that's like the bigger thing going on is that people are just willing to try it now.
Mm-hmm. Mm-hmm. Yeah, I think the Nifty Fi Summer, the whole incentive structure, whatever they launched, is I would hope at least has helped flatten that curve a little bit as well. But I think that's a good segue into. I guess this is like a general question you can ask most protocols building in crypto, but uh, let's say the market remains super top heavy in terms of like how many users create most of the volume. Are you guys of the opinion that you should be building to capture those users specifically, or are you more so trying to build the general like rails and primitives that are going to be useful for pretty much anyone one day? Because I think like Blur, great example, because obviously they did a really good job of capturing those big whales early on, and that kind of really turned the tides in that whole battle. But I don't know how sustainable it is in the long run. What is your guys' like take there, your approach there?
Basically, in terms of who we think we're building for, we want to like have a product and have ways to use the product that are functional for everyone. And the way that we kind of approach that is, the truth is different parts of the product are used by different people. So we expect, for example, as these vBIDS come out, that product will be used by like a kind of a more concentrated set of users that are willing or excited about doing more volume. And then our earn product is designed to be like extremely easy to use without even having to think about any of the like options math basically. And we have a bunch of people who have used it already without kind of focusing or without kind of too much finance experience at all. You just kind of want that core value proposition, so it's kind of a much broader based type of product. And ultimately, like what makes a market is having people with like kind of different views and different objectives come into one marketplace and trade. And that's basically the fact that there that disparity of objectives exists is kind of like what allows transactions to clear. Because if everyone, and Blur actually is seeing like a little bit of this problem kind of localizing their market, but if everyone is trying to do one thing within a market, then the trade action is just like not that interesting because they should at some point circle into kind of like the right price for that view, and then you don't and then your kind of liquidity drops. So I don't know, maybe that's like a little bit too complicated an answer, but basically like different parts of the product and different use cases are suitable for different types of users, and we kind of want to build each of those with those users in mind to improve overall liquidity.
Interesting. And diving a bit more into like the earn side of things, what kind of metrics have people been able to earn on their NFTs? What does the general number look like when you're kind of looking to do this if as a user?
Yeah, it's very variable on like how much risk you're willing to take. So kind of under the hood, when you use our current product, you're writing a covered call option. We framed the user as listing their NFT for a specific period of time. So, as you would imagine, if you agree to list your NFT for a longer time at a price closer to today's value, the amount that you can earn is like much higher. I would say on the high end, you might get for like a kind of 2 month listing, close to the current value, let's say 10% above today's floor, you might be able to earn, something in the range of 10% of today's floor value. And then on the low end, you're looking at a listing that's like far out of the money. So let's say, 40% above today's floor and on for a short period of time, you could earn less than 1% of the value of your NFT. And in our UI, we basically have a risk slider is what we call it. But basically, there's a couple of risk options, and that will explain to you what the rough percentage chance that your listing will get filled. So basically, that someone will buy your NFT, and then exactly what happens if they do that. So you can kind of customize your risk versus the amount of earnings that you want.
Awesome. And so right now the protocol is on a wait list, correct?
Yeah, correct. So basically, in order to help us manage liquidity within the protocol in terms of like matching buyers and sellers of options, we kind of periodically go through our wait list and let people off.
And so that's
So
a manual mechanism at the moment, like the matching.
we kind of it's like semi-manual is I guess what I would say. We trigger it manually as we're kind of managing the market, but we hope to make it more automated in the future.
Are there any like interesting metrics you've seen come from the current users you have on your waitlist, or is it mostly just for like I guess like more involved product testing at this point?
Uh, are there any interesting trades? I guess. Yeah, I think we've actually tweeted a couple. One thing that I think has been really interesting to watch is the Milady's market because it has been extremely volatile at different points over the last couple months, especially. So we had one user make I think it was like 315 or so percent, buying some Milady's options. We also had several users during down periods earn money writing these options on their Miladies and then rewriting options. And then now with like the recent run, we have some options settling today that should expire in the money where users will kind of make a kind of similar 200 to 300% gain when they might have been making like a 50 to 75% gain if they had just bought Miladies or some kind of perp for Miladies or something like that.
And how much volume
Interesting.
has gone through the protocol so far?
Yeah, that's a good question. So we're doing kind of like I would call like several options a week. Like sub 10 normally, but and then in terms of like total notional volume, I think we're at around like it's actually just slightly under $1 million to date.
Awesome. And so the protocol I know is taking or is planning to take 10% of the marketplace sales. Do you go deeper into that and how those rewards may be distributed, maybe?
Yeah, so we basically, as like a kind of marketplace fee, take 10% of the option premium. So if you think about like the earning amount of that you're getting when you write the option, we take 10% of that. So that kind of backs out to being, depending on the exact option terms, like something like zero point 0.5 or zero point 0.3 to 0.5% of the spot value of the asset, which is kind of how we arrived at that number.
Hmm. Gotcha. I'm curious. I mean, because we've talked about a couple of different milestones, I guess, and things you guys have planned. Are you able to like put that into context a little bit with like where you're at right now and what the next like year looks like for you? Like what's top of mind right now? What you guys plan to get done? Sort of like a high level roadmap almost.
Yeah, I think we maybe don't have like anything that we're ready to announce yet in terms of a year away, but certainly in the next few months, we're really excited about our kind of vBIDS product that I've been mentioning. We're really excited about trying to grow Earn. We've just gone through a big redesign of that product that makes it even more easy to use based on our kind of early user feedback. So we're hoping to get a lot more people in off the wait list soon for that, especially as we can scale liquidity on vBIDS. And then we also are really excited about a brand new option trading experience that's coming soon that yeah should like really help kind of boost the overall liquidity in the protocol. So those are the things that we're focused on, essentially product improvements and getting more people off the wait list. And I think if that goes well, the kind of opportunities for us to grow like beyond like the current business and the current like functions of the protocol are really exciting.
Gotcha. And how do partnerships fit into that growth with you guys specifically? Because I see a lot of NFT-Fi products different uh, of different like niches of different focuses partnering with each other. And I often wonder like what the area for collaboration is there exactly. So like on the partnership side,
Yeah, I think Austin can answer that one.
Yeah, so I'd say it breaks down into a few different things. So like one is like liquidity. So there are a few different NFT like DAOs that provide liquidity to the protocol. So for example, for like Floor DAO, I think there's a newer one called Sweep DAO. And then there's also, I guess, like more like not like institutional, but I guess like that's probably the best way to describe them versus a DAO, like Goldman Sachs. So there's that for like liquidity. I think a lot of people are trying to do it for like marketing. So I think like a lot of it is just like getting the word out about NFT finance and trying to convert those users who, may hold a lot of NFTs but haven't tried lending or options or whatever for, whatever reason. And then yeah, also just like expanding access to collections. So I think like right now, if you want to like either like differentiate like your marketplace or like differentiate your NFT collection, you need to offer something new to your users. And I think like NFT finance is a great way to do that, especially like I guess like with the Blur slash like OpenSea battle heating up, that potentially like NFT finance integrations could be a great way for them to differentiate themselves and also add like a new source of revenue.
Awesome. And obviously, the question that everyone wants to know. I'm sure you guys have been berated with questions like this for a while. Do you guys plan on releasing a token or some kind of incentive structure in the near future?
We definitely don't have specific plans to announce right now regarding a token, but we, especially given the kind of like overall trend in the market, have are not going to rule it out. And like I mentioned earlier, are even actively kind of developing our products such that we think they could be easily incentivized.
Awesome. And have you guys already like fleshed out a full funding round? Like, do you have enough road room to keep building and keep developing?
Yeah, I mean, we think we're comfortable with kind of like the amount of runway that we currently have, inside the business, and I think we definitely like are excited about the kind of like what the next few months have in store, just in terms of like our ability to show more traction and more growth, which could lead to opportunities to like raise additional capital, a ton of ways.
Awesome. And yeah, I think that's pretty much all the questions we have. I appreciate you guys coming on. If there's anything else you guys want to mention, or if you guys have anything else in mind.
No, I think we kind of covered the overall basic and current state of the protocol. So thank you guys so much for inviting us on, and I hope that this is the first of many podcasts you guys do. Yeah,
Yep, we got a good couple weeks set up, so it's gonna be awesome. Appreciate you guys coming on.
Yeah,
great.
thanks for having
Thanks so
us.
much,
Appreciate
guys.
it.
Excited to see this get built out. And yeah, thanks for coming on.
Thank you.
All right, see you guys.
Peace.